Hey everybody, Jerry here, Greystone Trading. I want to show you guys of how to protect your profits and how to go over this. So if you're constantly losing money in the market and it is kicking your ass on a left and right basis and you're over trading, you have all of these emotions going on, you're revenge trading, et cetera, et cetera. We've all been there. It's very painful. It sucks. We get it. Now, let's talk about how you can take your account with a very realistic goal of 3 to 3.5% weekly targets compounded in 1 year. I'm sorry, in 3 years' time, 3 years, $10,000 can literally become over $1 million. So hear that again. If you can compound 3.5% a week for 3 years, $10,000 becomes worth over $1 million. So you don't have to have these huge home runs. You're not trying to double your account. You have to have very realistic expectations. You have to be very disciplined and you have to be very consistent. If you can do those things, you can hit these weekly targets and you can literally be a millionaire in less than 3 years. I know that sounds like a long time. Trading is not get rich quick. If you think it is, it's not for you. So if you like the way this sounds, click the link below, like, subscribe, do all the shit you know you're supposed to. So check this out. Let's talk about it. Weekly target, 3.5% plus. You got to protect that weekly profit, that weekly target at all costs. You get close to it, 2.5%, you start going in defense mode. You do not go backwards on that. If you start the week red, you have a stop out. You have to say size consistently to get to your damn goal. However, this is the important part. I cannot stress this enough. You have to have a max loss for the week where you are done. You stop trading. You just look at the charts. You journal. You mock trade. You don't do anything else. Take the red week. It's part of the process. It's going to happen to you. It's going to happen to all of us. It's just the name of the game that we play, right? If you have two red trades in a row, shut it the fuck down. Stop trading. Just watch price action. Let it be. If you have a full green trade on your first go, it's a Monday morning, you are not at the weekly target, I would highly recommend that you size down. Turning a very green morning into a red morning is gut wrenching, right? No one loves it. We've all done it. It's terrible, right? So if you have a $10,000 account, you're sized at 20%, roughly $2,000 of your account. Sorry, roughly $4,000 of your account. Let's say that you take that $4,000, you get a 10 to 15% trade on that, right? That's a lot of money in your account. You are very close to the weekly target already. So if you decide to take another trade, you have to go in half size or a quarter size. So if you were at, easy math, 40 contracts the first trade, it was a full red or full green trade. You made a lot of money on it. Let's say you put $400, $500 in your account. The next trade that you go in with should be 8 to 12 contracts or less even. And now you're slowly going to creep those gains. You're looking to stack, slowly. If somehow magically you get that 3.5% to 6 or 7%, the higher that you get it, the higher the number you protect. So example, let's say you get to 4%, you should be protecting 3% and never fall below it. If you get to, you should be protecting 4. If you get to 5, you get the idea here, right? Now, you have to set a weekly max loss. If you take 2 trades, stopped out, and you're at like negative 4% of your account, I would stop trading for the day and accept a red day. Look at the afternoon, journal it, mock trade, or size very small. You're going to have a red day. You're not going to make it back unless price action switched up and it's very clean. It's not that your strategy is not working. It's just not working that particular day and possibly over the last few days. Nothing wrong with that at all, guys. So sizing down is very important. Do not be greedy. It's impossible to do that. Now, I'm going to show you a few trades, and I did not trade Friday, but I'm going to show you a few trades that I would have taken if I were on live session, right? This candle here is going to be my resistance line. The red one is going to be my support line. Let's say we only trade. Now, I only trade from 10 to 11 a.m., maybe 11:30 if price is really good. And I only trade from 1:30 to 3:30. And I try to keep that 1:30 to 3:30 to a 1 hour window. Less is more, guys. You don't need a lot of screen time. You don't need a lot of trades, right? So all that being said, Here's your 955 candle. It would have closed here. You could have easily said, yes, this was my resistance line. You probably wouldn't have taken that. Maybe you would have if you would have broke your rules a little bit. Bad idea. It rewards bad behavior. It kind of opens up Pandora's box. You get away with it once. You get away with it all the time, you think. This would have been a firm close. I don't think this is a firm candle. I don't think this would have allowed you to get in there the way I trade. However, this candle here comes up topside. I would have probably marked that candle in price in real time. Then you would have probably adjusted it here. Now you have 1-2 touches on it, right? You would have now had support established up here. You would have got into this trade watching this here. This was your firm close at the 10-10 candle. This little candle here probably doesn't get you half off, comes down, definitely doesn't stop you out. And now this candle comes up here, and from where you entered at is at 724.43. Candle comes all the way up to 724.87. That would have been half off. You would have got stopped at break even. You might have got 3/4 off. Might have, which is okay. Now, red candle comes here. And now let's just say this is Friday's price action, guys, right? It's Friday. Now, let's say this was Monday mornings. You'd have took your trade, you've been sized at 20%. You'd have got that trade, you would have made probably 0.75% to maybe a half a percent, depending on where your fills were, your exits were. So if it's Monday morning, you have to stay sized until you get to that goal, right? So here comes your setup. There's your support. Bam, red candle closes below at 10:30, rides this thing down. If contracts are moving right, there's your full trade, and you're probably somewhere between 2% to 2.5% in your account there. And I personally, at 10:35, would have probably not been done trading. Price action's looking really clean. It's following through nicely. You can see where it comes down. Bam, it rips there. It's now reacting to that perfectly. It's now reacting perfectly here. The top of that is where support now becomes resistance. You can see where it resisted there, finally breaks through it. Now, you can see here where it's resistance, resistance, resistance. I'm sorry, support, 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 where that was resistance there. This red hammer candle then comes down. You get another set of puts there, probably half off, maybe 3/4. These are nice looking candles. They're moving good. All right. So now there's your two trades. You would have had a half off and break even trade one. You would have had a 3/4 trade, maybe a full trade, trade two. Trade here, you'd had a half off to a 3/4 trade, 3 trades. That right there on a Monday morning is close to this 3 to 3.5% weekly goal. Call it a day, be done with it. You're coming up close to the end of the session. It's now 11:10. You're after it. You got your money. Now, when you approach Tuesday, what you're going to do is on Tuesday, you're at your goal. Let's say your goal is 3.5%. It's Tuesday morning. You have a long time left. Of course, you want to stack more money. I would personally come in at 1/4 of a size to maybe half size of my account, right? So if I'm at 3.5%, I'm willing to go down to 2.5% on a stop loss, but I'm trying to take my account to 4.5%, right? If I get to 4.5%, I'm now protecting 3.5%. If I get to 5%, I start protecting 4%, and that's all you do is walk that line. You walk it, you stack it, you walk it, you stack it. If you get greedy with it, it'll eat your lunch. You'll come on Friday morning, you're like at 8% account gain. You've fucking been killing it. You're like, I'm going to go in. I'm compounding it. You get stopped out. You're down at 1% or even a red week after 1 or 2 red trades because you got greedy. You have to stay consistent. You're in this for the long game. Stack those profits. Collect that money. Don't be a jackass, and this will make you rich as hell. Like, subscribe, click the link below. So, like, subscribe, click the link below. This is how you do it, guys.